Okay, so, we're always on the lookout for interesting stuff happening in the markets, and you send this our way, the recent earnings report from KB Home.
Yeah.
I mean, as a big player in home building, what they're seeing and doing it gives us like a peek into the bigger picture of the housing market, right?
Right.
So we're not going to bury you in spreadsheets and numbers here.
Exactly.
The goal is to pull out the key insights, like, what's going on with their revenue sales, what their own management is saying,
Hmm.
so you can get a feel for their business and what it might be telling us about the market as a whole.
Absolutely.
Hmm.
You want that essential understanding without like the data overload.
Yeah.
So let's start by looking at the big picture, their overall financial performance these first 3 months of 2025.
Okay, so the top line, the basics. How much money did they actually bring in?
Their revenues for the first quarter came in at $1.39 billion.
Okay.
Now, if we compare that to the $1.47 billion they reported for the same time last year, that's a decrease of about 5%.
Okay.
So a little less revenue coming through the door.
Right. Less money in, and I'm guessing that's connected to the number of homes they actually sold.
It is. They delivered 2,770 homes in this first quarter.
Okay.
And compared to the 3,037 homes delivered in the first quarter of 2024, that's a drop of 9%.
All right.
So fewer homes actually changing hands.
So fewer sales, less revenue, you'd think? That would be the whole story?
Yeah.
But I noticed the average price of the homes they did sell actually went up.
Right.
How does that fit into this whole picture?
That's a crucial point.
Yeah.
The average selling price per home actually increased by 4%,
Okay.
going from $480,100 to $500,700.
Wow.
So what's interesting here is that even with fewer deliveries, that higher price point provided some offset to that overall revenue decline.
Okay.
It makes you wonder, is this because like the types of homes they sold shifted more towards, pricier properties, or were they able to maintain pricing power despite, the lower volume?
Yeah, that's a good question. It suggests maybe one part of the market is doing better than others. So with less revenue, but higher prices, what happened to their bottom line? What about like net income and earnings per share?
Their net income for the quarter was $109.6 million.
Yeah.
That's a decrease of 21% compared to the $138.7 million they had last year.
Hmm.
And similarly, their diluted earnings per share were $1.49, down 15% from $1.76.
So even though they were selling for more on average, it wasn't enough to make up for selling fewer homes and maybe other cost factors too,
Right, potentially.
which we'll get to.
Yeah.
I also saw they bought back a chunk of their own stock this quarter. What's the thinking behind a move like that?
Yeah, they repurchased $50 million worth of their common stock,
Okay.
which was 753,939 shares at an average price of 66.32.
Okay.
Companies often do this for a few reasons.
Right.
It can reduce the number of outstanding shares, which can, in turn, increase those earnings per share
Right.
and potentially make the remaining shares more attractive to investors.
Right.
It can also be a signal that the company believes its own stock is undervalued.
Okay, so that's hard data. But what are the folks at KB Home actually saying about all of this? Like, what's their take on these numbers and what they might mean looking ahead?
Well, CEO Jeffrey Misker was pretty direct in his comments. He stated that consumers are being more cautious right now,
Yeah.
and he attributed that to affordability concerns, as well as the broader macroeconomic and geopolitical uncertainty that's out there, that we're all dealing with.
Yeah, that cautious consumer sentiment seems to be a recurring theme across different sectors.
It does. You see it everywhere.
Yeah.
And Mesger specifically said that even though they had a healthy number of people visiting their communities, so there's still interest out there,
Right.
the actual demand at the start of the spring selling season was more muted than what we have seen historically.
Yeah.
So that's interesting. People are looking,
Mm-hmm.
but they're maybe hesitant to make that big commitment to buy right now.
So foot traffic is there, but it's not turning into signed contracts at the same rate. How did KB Home respond to this, shift in buyer behavior?
Well, Mesger highlighted that in mid-February, they took a big step to reposition our communities to offer the most compelling value.
Okay.
So this likely means they adjusted their pricing, or maybe even the features and sizes of the homes they were offering,
Okay.
to better meet what buyers were looking for in terms of affordability.
Right.
And he did say they saw a positive response from buyers after making these changes.
Okay.
So that suggests they recognize that these affordability concerns were a major obstacle for buyers.
Sounds like they were trying to get ahead of the curve.
Mm-hmm.
But given the slower start to the year, did it change their outlook for the rest of 2025?
Yeah, it did. They
Yeah.
actually reduced their revenue guidance
Hmm.
for the full fiscal year.
Okay.
Mesger specifically said that this downward revision was primarily due to the lower level of net orders they got in the first quarter. So even with that positive response later in the quarter after they, repositioned their communities, that initial slowdown has had an impact on their expectations for the year as a whole.
Okay, so even a strong finish wasn't enough to completely make up for that early softness,
Yeah.
even though they lowered their expectations. What was the general tone from the CEO? Was he sounding worried at all?
Well, he acknowledged the challenges in the market, but Mesger did express confidence in his team's ability to navigate
Yeah.
this variability.
Okay.
He emphasized their focus on delivering customer satisfaction and, ultimately achieving their goals for the year.
Right.
So it's a cautious outlook for sure, but it's framed with the sense of, we're prepared to adapt to the conditions.
Okay, good. Let's dig a little deeper into those sales figures. You mentioned net orders were down. Can you give us a sense of like how much they decreased?
Absolutely. Net orders for the first quarter were down by a sizable 17%,
Wow.
dropping from 3,323 in the first quarter of last year to 2,772 this year. So that's a big drop in the number of new contracts they signed.
And what does that look like if you break it down by individual communities?
Hmm.
I feel like that often gives you a better picture of the pace of sales.
That's right. Monthly net orders per community decreased from 4.6 to 3.6.
Okay.
So that means on average, each of their active selling locations was generating fewer new sales compared to the same time last year.
So not just fewer new orders, but it seems like more people who had said they were going to buy a home ended up changing their minds.
Yeah.
That cancellation rate went up, right? What could be driving that?
Yeah, it did. The cancellation rate as a percentage of their gross orders increased to 16% compared to 14% in the first quarter of 2024.
Okay.
So that 2 percentage point increase is something to pay attention to.
Right?
Could be a few things.
Yeah.
Maybe buyers are having trouble getting mortgages with interest rates still being high,
Mm-hmm.
or maybe just a general sense of, economic uncertainty making people think twice about big purchases. It's definitely a sign of, buyers being more sensitive.
So fewer new buyers, more cancellations. That's a tough combo.
It is.
It must have had a big impact on their backlog of homes, the ones they've sold but haven't finished and delivered yet.
Exactly. Their ending backlog of homes decreased significantly to 4,436, down from 5,796 the year before. That's a substantial reduction.
Mm.
And the value of that backlog also declined by 21% to $2.2 billion, down from $2.79 billion.
Wow.
A shrinking backlog can be a sign of, potential revenue challenges down the road.
Fewer future sales lined up.
Yeah.
That really highlights why they might be adjusting those revenue expectations for the year. Now, one area where they did see positive movement was in the number of communities they have up and running.
Right, that's correct.
That's great.
Their average community count for the quarter increased by 7% to 257, and their ending community count also rose by 7% to 255.
Okay.
So they have expanded their footprint in terms of active selling locations.
So which makes that decrease in net orders per community even more noticeable, right?
Mhm.
They have more places to sell. But each location is on average selling fewer homes.
Yeah.
Let's switch gears a bit and talk about how profitable they were this quarter.
Okay.
How did their operating income and profit margins look?
Their home building operating income decreased to $127.3 million from $157.7 million. And their home building operating income margin also went down from 10.8% to 9.2%.
Okay.
And the report specifically says this is mainly because of a lower housing gross profit margin.
Okay, and what were the main things that squeezed that gross profit margin? What made it more expensive to build and sell these homes?
KB Home pointed to a few key factors.
Yeah, okay.
They mentioned higher relative land costs. So that means the price they paid for the land itself was higher compared to the selling price of the homes.
Okay.
They also had to give more concessions to home buyers.
Mm-hmm.
Those concessions likely tie back to their efforts to offer more compelling value
Right.
and could include things like price reductions or other incentives.
Right.
And finally, they talked about reduced operating leverage.
Operating leverage. That's a term you hear sometimes. Can you explain what that means in plain English?
Sure. Operating leverage is basically how much a company's fixed costs affect its profitability.
Okay.
In home building, those fixed costs could be things like administrative overhead or the costs of running model homes.
Mm-hmm.
So when sales volume goes down, like we saw with KB Home's lower deliveries,
Right.
those fixed costs are spread out over fewer units,
Right.
making each sale less profitable on a gross basis.
Okay.
It's like, like running a restaurant with certain rent and staff costs if fewer people come in, your profit per customer goes down.
Right. Makes sense.
So their lower sales volume contributed to that margin pressure.
Okay.
Their housing gross profit margin specifically went from 21.5% down to 20.2%.
I noticed they mentioned an adjusted gross profit margin as well.
Right.
What's the deal with that? Why do companies sometimes show these like non-standard numbers?
The adjusted housing gross profit margin is a non-GAAP measure, GAAP being generally accepted accounting principles.
Right.
So KB Home calculates this by taking out certain items,
Okay.
in this case, inventory-related charges.
Okay.
So in the first quarter, their GAAP gross profit margin was 20.2%, but the adjusted number was a little higher at 20.3%.
Okay.
And for the same time last year, the GAAP margin was 21.5, and the adjusted was 21.6.
Okay.
So companies often present these adjusted figures to give investors what they see as a clearer picture of their core performance
Mm-hmm.
by taking out the impact of what they might consider unusual or one-time items.
Okay.
But it's always important to look at both the GAAP and the non-GAAP number to get the full story.
Makes sense. It's like trying to see the core profitability without some of the, one-off stuff.
Yeah.
Now let's look at their overall financial health.
Mm-hmm.
What does their balance sheet tell us about their assets and liabilities?
Well, their total liquidity looks good at $1.25 billion, which includes $267.8 million in cash.
Okay.
But we did see their inventories go up. They went up by 7% from the previous quarter and a more significant 13% year over year, reaching $5.94 billion.
An increase in inventory could mean a couple of things, right?
Mm-hmm.
Maybe they have more finished homes they haven't sold yet?
Yeah, that's a good possibility. It could be that homes are taking longer to sell in this current market.
Right.
But on the other hand, their investments in land and land development also went up a lot, increasing by 57% year over year to $920.3 million.
Okay.
This suggests they're still investing heavily in land for future projects,
Mm-hmm.
which could mean they're optimistic about the long term despite the current challenges.
And their total number of lots owned or under contract saw a big increase too.
Yes, those increased to 78,233, which is a sizable 41% growth year over year.
Yeah, that's significant.
This really reinforces the idea that they're actively planning for future development, even though the market is a bit softer right now.
Okay. On the flip side, their debt seems to have gone up.
That's true.
Yeah.
Their notes payable increased to $1.79 billion. And they said this is because of cash borrowings they took on.
Okay.
So their debt-to-capital ratio also went up a bit from 29.4% to 30.5%.
Mm-hmm.
Now, that ratio is a way to see how much of a company's assets are funded by debt versus equity.
Okay.
And a higher ratio can sometimes mean more financial risk.
Right.
But a small increase like this isn't necessarily a red flag on its own.
Okay. And what about their equity position? How's the overall value of the company looking?
Their stockholders' equity grew to $4.09 billion,
Okay.
driven mainly by the net income they made during the quarter,
Right.
although that was partially offset by the stock buybacks and the cash dividends they paid out to shareholders.
Right.
But their book value per share,
Mm-hmm.
which is a measure of the net asset value for each share of stock, that actually increased by a solid 12% year over year to 57.05.
Okay, so kind of a mixed bag on the balance sheet.
Yeah.
More investment for the future and stronger equity, but
Mhm.
also a bit more debt on hand.
Right.
Now, KB Home also has that financial services division.
Right.
How did that part of their business do?
Their financial services segment saw their pre-tax income drop by 35% to $7.5 million.
Okay.
The main reason was lower income from their mortgage banking joint venture, which makes sense because they delivered fewer homes.
Right.
So naturally, fewer new mortgages are coming through their affiliated business.
Fewer home sales, fewer mortgages. It all connects.
Exactly.
Okay, finally, let's come back to what KB Home expects for the rest of 2025. We've already talked about the lower revenue guidance, but what else did they say to look out for?
They're now saying they expect housing revenues for the full year to be between $6.6 and $7 billion.
Okay.
But they also lowered their expected average selling price for the year to between $480,000 and $495,000.
Okay.
Now, that's interesting because remember, their average selling price actually went up this past quarter.
Right.
So this could mean they think buyers will be more price sensitive as the year goes on.
Mm-hmm.
Or maybe they expect to sell a different mix of homes leaning towards more affordable options, which, might reflect how well those efforts to offer more value are working.
So maybe they're thinking they'll sell more homes at a slightly lower average price to boost volume.
Could be.
What about their profitability outlook for the rest of the year?
They're projecting a home building operating income margin of about 9.4% for the full year.
Okay.
Assuming no more inventory-related charges,
Right.
their expected housing gross profit margin is now somewhere between 19.2% and 20%,
Okay.
also assuming no inventory charges.
Right.
And both of these projected margins are a bit lower than what they actually had in the first quarter.
And their expenses and tax rate, what are they anticipating there?
They expect selling general and administrative expenses to be between 10 and 10.4% of their housing revenues.
Okay.
And they estimate their effective tax rate for the year will be around 24%.
Okay.
Finally, they think their ending community count for 2025 will be about 250,
Okay.
which is a little lower than the 255 they had at the end of the first quarter.
So it sounds like they're moderating their expectations across the board as they go through the rest of the year.
Yeah, that's a fair assessment.
The report also had some extra information on how they did in different regions of the country.
Mm-hmm.
Were there any big trends or differences that stood out?
Yeah, there were some regional variations that are worth noting. They give us a more detailed look at the market.
Okay.
For instance, the West Coast consistently had the highest average selling prices,
Okay.
which makes sense given, the generally higher real estate costs in that part of the country.
Right.
And we also saw some differences in the number of homes delivered and the volume of net orders across their four main regions,
Right.
the West Coast, Southwest, Central, and Southeast.
Mm-hmm.
So these regional differences probably reflect the unique economic conditions and housing market dynamics in each area.
Right.
Like a region with a really strong job market might have seen a smaller drop in net orders compared to a region facing more economic uncertainty. So digging into those regional details can give us more insights into the specific strengths and weaknesses within the national housing market.
All right. So to sum it all up for you, our listener, this look at KB Home's latest earnings shows us a housing market that's giving some hints of cooling down.
Right.
We saw fewer homes sold and lower overall revenue,
Mm-hmm.
but those average selling prices are still going up,
Right.
which suggests that maybe a certain part of the market is still pretty strong.
Yeah, I think that's a key point.
We also heard straight from KB Home's leadership that they're seeing buyers be more cautious because of affordability concerns and, just general worries about the economy. And the fact that they're actively trying to adjust to these changes in the market and saw some improvement in sales after doing that shows they're being proactive. But that lower volume of new orders early in the year means they had to lower their expectations for the whole year.
Right.
And on the profitability side, we saw some pressure on their margins because of higher land costs and the incentives they're offering to buyers. Meanwhile, their balance sheet shows they're still investing in future growth by buying land, even though their debt has gone up a bit.
Right.
And their financial services arm was affected by those slower home sales, too.
Exactly.
So this report gives us a good look at what's going on in the housing market right now.
I think so.
Those lower sales volume, rising cancellation rates, and affordability worries all point to a market where demand might be weakening.
Yeah, could be.
So it'll be interesting to see how KB Home handles these conditions
Mm-hmm.
and whether their revised guidance turns out to be accurate.
Yeah.
Now, here's something for you to think about. How do these trends from a big player like KB Home match up with what you're seeing or hearing about the economy and housing market in your own area?
Yeah.
What questions does all this data raise for you about where things are headed in the coming months and years,
Mm-hmm.
both for the housing sector and the economy overall? Think about that balance between affordability, buyer demand, and the actual supply of homes out there.
Those are all critical factors to consider.
So this deep dive has given us a snapshot of a specific moment.
Mm-hmm.
And as we keep following the housing market and get out information,
Right.
we'll definitely gain a deeper and more complete understanding of these shifts and what they mean in the big picture.
Absolutely.
Okay, until next time.
Take care.
Thanks for joining us.
Bye.